Hi there, Sean Kevelighan here with the Triple I. I'm here for another executive exchange, and I'm really excited about our guest. Roger Schmelzer is the president and CEO of the National Conference of Insurance Guarantee Funds. This is an extraordinary organization, but first, Roger, let me welcome you.
Thank you, Sean. It's a pleasure to be here.
You know, Roger, I like to refer to this organization as really kind of a quiet giant of economic sustainability. And as I understand it, it's turning 35 years old this year. Can you tell us a little bit about the State Guarantee Fund and in particular how NCIGF supports it?
Sure. Well, the first thing for everyone to know is that it's an autonomous system. It's an autonomous network. So each state has statutes that create state guarantee funds. The system has existed for much longer than 35 years, originally run by the industry itself. And they would pass around the coordinating function, just alternate every 2 or 3 years. But then 35 years ago, the decision was made that there needed to be an actual full-time organization, professional staff that was dedicated to this project. So what we do is we provide the coordinating function full-time for those state guarantee funds, of which there are 55. More than there are states, because some states have more than one guarantee association in them. Some do everybody has a property and casualty guarantee association. Some also have a separate workers' compensation guarantee association, and they're all members of ours. So what we do, we're not claims payers. We're not people who we don't have that expertise on our staff. We try to do things for our members that they would not be doing themselves, and is always better for it to be done in one place than in every state. So we provide operational support to them. A lot of that is technology related. We provide communications, education, and outreach like we're doing right now. Support to our members, and then public policy management. This is a very heavily statutory, rule-based activity, and there's always a need to be able to manage the public policy. You made the great point about more people need to know more about it, and because more people don't know more about it, there are a lot of public policy ideas that get thrown around that are not necessarily good ideas, but we got to stay on top of that.
Well, absolutely. I mean, especially as you mentioned, this is a state-regulated industry, and so oftentimes, even at the federal level, we're trying to educate federal lawmakers. So the 55-plus other policymakers as well needing education, and to your point, coordination through your organization, I think is critical and good for good reason why they established it 35 years ago. So I was recently on your LinkedIn post, and I saw that you, with this anniversary, you've also got a new strategy that your board approved. Wouldn't mind if you could walk us through a little bit of that, some of the highlights.
Sure. So what I just talked about the things that we do, those are our primary strategic objectives, and they were established in 2008. And our strategic planning committee and our board reviewed those and said, yes, we like those. We think those are good. We think, though, we can take this a little farther. We call it an evolution, not a revolution. Mm-hmm. So what they asked us to do was to focus on three not necessarily new, but three enhanced areas. One is moving pre-liquidation planning. So all the activity that goes into a company, a troubled company before it becomes insolvent. So pre-liquidation planning, and we put together a nice framework with the NAIC in the last several years, regulatory framework and statutes in some states. And now what we want to do is move that from the framework state to the implementation and execution state. So that's one. The second one is to understand and prepare for the changing landscape in insolvencies. There aren't very many insolvencies. In a typical year, there might be 5 or 7. And that's a tribute to state insurance regulation. Regulators do a fantastic job with that. So when they happen, though, there's a lot on the line. And so what we want to try to understand better are the trends and the factors that could lead to insolvent situations. We don't want to know about companies. We just want to understand the trends and then do whatever we have to with our members, working through our educational arm to make sure that members are prepared for whatever those trends might bring. And then the last thing is to find shared solutions to common problems. Our system is $100 million to run. That is a drop in the bucket to the size of the U.S. property and casualty insurance industry. NCIGF is $5.5 million. Even though it's not a lot of money, it's still a cost to the insurance industry. And so it's in everybody's interest for us to do the maximum amount of work we can do and productivity that we can bring at the best cost, most reasonable cost possible.
No, it is. It's remarkable because you don't see insolvencies really all that often. But I think what's behind that is what you're talking about here, which is this kind of belt and suspenders approach, if you will. Mm-hmm. And I'm interested on the pre-liquidation planning. What drove that, given kind of what you're talking about in terms of not as many insolvencies, but what was a big driver there with pre-liquidation planning?
So it's all data. That's the issue. In the old days, 20 years ago, everything was on paper. And individual guarantee associations would take deliveries of pallets of boxes with all of this paper in it. And they would have to go through that manually at first, eventually feed it into their own computer systems. And then they adjust claims just the way an insurance company would adjust claims. Well, the insurance industry now is almost totally digital. Very few paper files out there anymore. And so all of that information, Sean, has to be transferred to the state guarantee associations and then to insurance receivers so that the insurance claims can be paid promptly, which is in everybody's state statute. The claims shall be paid promptly. And that is a harder, more complex job than it sounds. We're used to doing things in 2 or 3 clicks in our everyday life. But all of this has to be fed into a non-industry standard communications protocol that's managed by the NAIC. And so nobody knows how to do that except us. We know how to do that, and we want to make sure that happens sooner rather than later so that our guarantee fund members can meet their statutory responsibilities.
Well, and it does speak to this industry is so rooted on keeping its promises. So this is now just a better way to keep those promises, it sounds like. So wonderful to understand this, Roger. Again, I think as we agree, more people need to understand it. But this now is the part of the exchange where you get to ask me a question. So go ahead.
All right. Well, Sean, from your catbird seat, what do you think that the news media and others get wrong about the insurance industry that people like you and me and those watching this video here today can do something about to correct the record?
Well, I honestly believe what we're talking about here today is a big part of what people don't understand. If people knew just how much insurance drives economic growth and sustainability, they might have a different feeling about it when they're purchasing it and such. We did a video a few years ago that was A World Without Insurance, and really just talking about how insurance is in everything, from buildings and development to healthcare management. There are just so many ways that insurance allows an economic or an economy, I should say, to grow and to thrive and to be sustainable. And oftentimes this industry is the financial service that weathers economic storms just fine because like what we're talking about here today, we're planning, we're making sure that we're solvent, we're making sure that we can keep our promises. So we'd like more people to be informed about that. I do feel as though more people are listening about insurance. We've been seeing some years where insurance is getting higher in terms of costs. People are asking questions about why. They want to know about it. And we're trying to inform them that this is a mutual relationship where we need to manage our risks together. We need to make ourselves more resilient. The industry is shifting into being one that just repairs and replaces to predicts and prevents. And that means a relationship that needs to happen between the consumer and the community and the insurer. So we're hoping that more and more as as people are managing their risk, they better appreciate it and understand just what good insurance does. And certainly your organization does a lot of good. So I'm glad we had this time to talk here. And through our III network, we're going to make sure just as many people as possible understand the good work of the state guarantee system. So, Roger, I really want to thank you for your time.
Thank you, Sean. Thank you very much for the invitation. We look forward to having you at our fall workshop later this year in Savannah.
I am looking forward to that as well, and not just because it's in Savannah, but I always enjoy your company. As always, we enjoy your company and appreciate you taking the time to join us for another executive exchange. Thank you.
Thank you.